A lot of your stop losses get hit and you don't even know why. You think you're following market structure, but you're not really following it properly. Understanding premium and discount pricing is so crucial. Without it, you're going to be stopped out again and again and again, not knowing why price retraced more than you think it should have. In this video, I'm going to be showing you exactly how I use premium and discount pricing to capture the correct market structure moves. It's so simple, it's just one tool and you'll be set for life. So let me just show you how to do that. So this is German 40 right here. On the 30-minute time frame, I'm going to be showing you the basic market structure, how stop losses would have been hit, and how you could have prevented that, and how basically we moved up to break the previous high. So let's get into this. Over here, we can see that price made this high over here. So let's just mark out our highs and our lows. So we broke this structure right here to the upside. So technically we are bullish, breaking the structure to the upside. And people are going to try and get some sort of retracement to take the buy up to take out this previous high. Because over here we can see we have equal highs right here. Great liquidity point for people to aim for. However, not really an equal high, but close enough. So let's just mark that out like that. And so basically people would have been trying to buy on this retracement to push up and break this previous high over here. So they would have tried to buy on, let's say, let's mark out this some sort of like resistance right here. So they would have saw this little tap, trying to buy, and finally they would have got some sort of like buy confirmation right here or something, or this bullish candle right here or whatever. They would have placed their buys, stop loss just below like there, so like below this wick low over here, and they would have been aiming for, let's say, this high, but maybe they want to get some sort of like another big push or whatever. But what you can see over here is price retrace straight down, taking out these lows, and then finally we push up to break the high again. So then we finally broke up to this high. So sure, people would have got in over here, they would have taken the buy, they would have swept this previous high, great. But then price moves down and then finally breaks up high, and they would have caught a much better move right here. And overall, if you were actually holding that position right there, price actually continued all the way up, finally getting to the big highs. So what happened over here? Let's have a look at this. Over here we can see that price pushed up, right? Breaking structures to the upside. Now, if we mark out our discounted area, actually, you know what? Let's start. What is premium and discount area? It's simply a retracement of more than 50%. So when price moves up like this, breaking structure to the upside, you expect a retracement of at least 50% so that price is in a discounted area, and that's where investors are much happier to buy to push price back up. But if you're buying on this little retracement right here, more than likely as price is moving up, breaking highs, you're just going to get taken out before the actual move happens and price finally moves up to the upside. So if we mark out our fib from this low right here, from this low right there all the way to this high, or let's say even this high right here, you can see price is retracing more than 50% finally. And then if we look over here, price moves even higher. But that move didn't happen until we had more than a 50% retracement. That is so crucial right there. People that took their buys over there, they would have been trying to catch the next big move, but they would have been taken out, and then finally price, after retracing more than 50%, tapping into some sort of area of liquidity and like fair value gap or inefficiency, finally then price moves up. Key take: retracement of more than 50% into an area of interest, which could be like a fair value gap on whatever time frame, and then finally price moves up in the actual direction it was intending to. So you basically want to be looking at areas below 50% to buy. And obviously it's vice versa, the same thing when you're selling. If you have a little retracement, you don't want to be taking that sell. You want a retracement of more than 50%, and that will be a 50% retracement, which will be a premium area to be selling from. So again, very crucial. Just look at this, it's so clean. You mark out your high and your low, so right there to there, whatever high is made, or let's say you even wanted to mark it out up to this first high that was made. So from this low to this high, just move it to the right, and you can see right there we retrace more than 50%. So if you took a buy over there, you would have been taken out. as price moved up, and then straight away pushes down, finally getting those orders below in the discounted area, and then we make our moves up. So let's remove these right here, and let's look at another example. Literally on the same chart, let's look at this little scenario here. Now I'm going to be showing you how it presents itself in different ways. So that was one big major move, right? So in this scenario right here, you can see price moved up and then retrace and then tried to move up, and people would have been trying to buy from here, but then finally it moved down further and then continued up. What happened there? If you mark out your fib from the swing low to the swing high, actually, you know what, let's mark it from this low, because that's the major low. But okay, even in this scenario, let's say even if we did that, price barely retraced just into the 50%. Actually, you know what, if you zoom in, yeah, just about tap 50, but not really. So if you had used this swing low right here, you can see this retracement right here, it didn't retrace more than 50%. Price started moving up. This is where early buyers are getting in, trying to take the buys, trying to catch the next bullish move up. But they get taken out. Finally, price moves down further into our discounted area, and then you can mark out, let's say, this fair value gap right here. Actually, if we look at it on the 1 hour, it's probably better. Let me get the replay tool in case, so I don't disappear from this area. So if we look at like the hourly time frame, I'm sure there's a fair value gap. Okay, there we go. I thought so. So we can see right here, we can mark out this 1 hour fair value gap, which sits at a 50% retracement. Finally, price, look at this, so clean. Look at it. You see this retracement. So we've broken structure to the upside right here. We've broken this high right here. Price is moving up. It retraces. Now you have this bullish candle. Oh my gosh, people are trying to buy. No. They tried to buy. They get taken out. Big wick down. Finally into a discounted area, which is below 50% of this entire swing low to swing high. Retracement of more than 50%. You have a fair value gap sitting right there. I like to call them inefficiencies, but most people know them as fair value gaps because of ICT or some crap. But these are just inefficiencies. That's what I call them. Or imbalances. Imbalances is the OG word. So yeah, we have this imbalance right here. Price retraces more than 50% into the discounted area, and then finally price moves up. Are you understanding this now? Like, come on. Price moves up, break structure to the upside. You have this retracement, but it hasn't come into a discounted area. You have this bullish candle. Now people are thinking, let's buy. Look, we're retracing. We've retraced now. Now we're going to be making the next high. But then they get taken out. And price retraced more than 50% into a discount. So what have we learned right now? Breaking a high, you're expecting a retracement of at least 50%. If not, you don't take the trade. You need some sort of retracement of more than 50%, whether it's retracing up 50% or retracing down 50%, depending on the structure or if you're buying or selling. And you have to look at some sort of imbalance within that discount or premium region. So this is a discounted region. We have a retracement of more than 50%, and finally price moves up. So crucial. Let's go into the 30-minute time frame. I saw another example somewhere. Okay. Let's look at it in a different way. It presents itself in numerous ways, and the more you practice it, the more you're going to be spotting it, basically. Look at this. This is so fun to see, right? We have this high that was broken, very clear. Look, we have this low, we broke it, captured liquidity, pushed up finally, breaking structure to the upside. Cool. You're going to think to buy, which you're correct. But how do you want to buy it, and where do you want to buy it? People might mark out this order block right here. They'll think, wow, look, we have an order block here, let's try to buy. But price went lower, and then finally we started moving up. Why did that happen? A lot of people don't ask that question. Why did that happen? This is what I like to do. Look at where it finally reversed, and then understand what the price action was before that happened. So what I mean is, in this scenario right here, let's just look at this. We have this break of structure to the upside, right? Or, okay, or market structure shift, whatever. But break of structure, for just the sake of this example, we have a break of structure to the upside. Price barely retraced and then started moving up even higher, right? This is another way this discounted region presents itself. I'm going to show you this. Let's drop to the 1 minute just to make it a bit easier to see, right? Cool. Actually, let's do 5 minutes, a bit better. Okay. So simply put, you can see price broke this high, and if you mark out your swing low to your swing high, did this retrace more than 50%? It didn't. Retracement of more than 50% would be around this region right here, and we can see like this 5 minute fair value gap or inefficiency or imbalance, whatever. So we have this zone right here. Price never retraced more than 50%, and we actually started moving up even further. So we have areas down here that were untested, that were in a discounted region. So a lot of like big money investors or market makers, whatever you want to say, they have not had their positions filled down here who would want to buy at a discounted region. So let's mark out our fib from this swing high to this swing low, because look, this high didn't break this high, so we're not going to count that as a swing high. Finally, when price moved up and then started retracing before finally moving up, we have this swing high right here. That broke this structure to the upside. So if we mark out this high and this low, we can see it retraces more than 50% down here. Look at that. So from this high to this low, we had this region down here where price did not retrace down to. So let's go on to the 30-minute time frame. And look. So price over here, you have to understand this, it didn't retrace more than 50% before continuing up. So we've already made a swing high, we retraced down to make a swing low and then pushed up even higher. But that swing low never retraced more than 50%, and then we started continuing up. So that area is still open for retracement. And then what we can see is price finally, if we get rid of this order block where people would have tried to buy from, price finally retraces more than 50% of this swing high to this swing low, where price didn't retrace more than 50%, retrace more into a discounted area, look finally down here, which was down here in this region, into a discounted area, and then finally price moved up. And then if we look to the left, we can see again right here, price from this low to this high, it retraces more than 50%, as we just previously spoke in the previous example, right there again. Instead of just retracing over here, taking a buy, it pushed down even lower into a discounted area and then started moving up. So are you seeing this? Like, this is basically where your mind should just be clicking. If you are new to this, if you don't understand premium and discounted regions, understanding this is so crucial. It changes your whole trading game. Understanding that where price didn't retrace, where price did retrace, and then you start figuring out, okay, if it hasn't retraced more than 50% over here, we're more likely going to break this low to finally get that retracement in this region to come into a discounted area to then finally move up. Hopefully these three examples that I've shown you have clarified exactly how premium and discounted pricing works. Let me quickly just see some sort of premium one, because I've only shown you discounted area ones, but let's look at premium. I'm just going to randomly quickly do it, right? Let's quickly see from this high to this low. Yeah, we retrace more than 50%. Cool. Okay, right here. This is a key one as well. This is another way that price demonstrates itself. So we have this this high and this low. Okay, so price moved down, we retraced up. You know what, let me make it even easier. Let me select it like this, play that a bit. Okay, I just want this key price action right here. So let's drop to the 1 minute to make it a bit easier to understand where price retraced. So we have this swing high, we have this swing low. Price moved down, we retraced up, and then we started getting some sort of bearish candles, and sellers would have thought, oh yeah, let me get into the sell. They would have tried to sell, they would have been making a bit of money, but then a lot of them would have tried to hold all the way down. But again, look, price started then retracing up, taking out their stop losses, and then finally price moved down. Now understand why. If we see this little retracement, we didn't retrace more than 50% of this move right here. So if we mark out the high from here to this swing low right here, right there. So you can see we have this high, this low, 50% sitting right there. You have this area, which is a premium area, sitting up right here. Price did not retrace more than 50% into a premium area. You can see that. And then finally, when price moves down, we can see it finally moves up, taking out these highs into our premium area, and then we get the actual sell. Does that make sense to you? Look, just look how clear that is. From this high to this low, we get a retracement, but then we start moving down lower. But hold on, we didn't retrace into a premium before getting that push down further. So we can expect a retracement of more than 50%, taking out these highs to then actually continue down. So this is how you position yourself in the market. If you see price has retraced less than 50%, and then we're moving down even further into that area, you can mark out your premium area, and now you know this region up here is where you actually want to sell. So all you have to do is just wait for price to come into that area, get your confirmation, which is a reversal confirmation, which can be a market structure shift to the downside on the 1 minute time frame. So let me just quickly show you right here. We can see price broke structure to the downside, and we had this market structure shift to the downside. We mark out our fair value gap or imbalance, and then boom, we get a retracement up, tap into that, and boom, we continue all the way down. Whether it be a market structure shift or an imbalance to the left, whatever it is, but understand that this is how market structure moves. Understand that premium and discounted regions are so crucial when it comes to market structure and understanding how to position yourself in the market, where to position yourself, etc. Understanding that this is just liquidity because we haven't retraced into a premium area is more than likely going to be taken out to finally get the actual move that you want it to present. So hopefully this was a very insightful video in understanding premium and discounted pricing. It's something I use every single day in my trading, especially with German 40, but again, any pairs. It's just how market structure moves. It's just premium and discount, premium and discount. And if you don't get that retracement to a premium or discount, you're eventually probably going to get it later on, and that's where the highs and the lows are taken out falsely, where stop losses are hit, and then finally you get the actual move that you want. So that's the end of this video. I'm sorry I spoke for so long. Hopefully it was helpful for you. If it wasn't, I'm sorry, but I'm trying my best. My first video on YouTube. Hopefully you enjoyed it and understood something, and just drop a like and a comment and subscribe to my channel, and I'll continue making more of these educational videos. So thank you again. I'll see you later.